Right. Alphabet reported quarterly financial results, and I've been looking forward to these figures. Of course, you probably already know I've rated Alphabet as one of the best 9 stocks to buy this year, and I own Alphabet stock myself. I've owned Alphabet stock since the crash in 2020 around March, and I've held my shares since then. Some factors I've been watching very closely will Alphabet is how the development of artificial intelligence and large language models specifically is impacting Google's search business. Alphabet has come to me as a shareholder and told me what they're planning to do. And then they come back to me and tell me, uh, this is the thing we were planning to do. We did it, and it turns out it worked better than expected. And I've been hearing a lot of that from Alphabet over the last 5 to 8 years. A lot of tempting, iterating, trying new things, and coming back to investors and saying that, hey, these things are working well. And you might be thinking right now, well, if that's the case, why is Alphabet share price underperforming here in 2025? And it mostly has to do with the risks to the Google search business, which are increasing. Large language models are becoming more effective and gaining market share in terms of search queries. People are searching more with large language models because they're proving to be so useful, and that threatens Google's search business. But I've argued that Google's search business had only downside because it had a market share of roughly 90% worldwide, and it was gaining the attention of regulators, and the increase in activity towards large language models. While it is going to take market share away from Google search, the overall size of the pie is also increasing. People are searching more frequently, and so there's more search queries to serve, and so the overall size of the pie is increasing. Alphabet's share of that is decreasing, which will relieve some regulatory pressure, and the valuation has already come down to more than account for that risk to its AI, to its search business. So Cloud had another great quarter of strong growth in revenues with backlog and profitability increasing. Google Cloud is now at a run rate annualized at more than $50 billion. And the management team said, we are seeing significant demand for our comprehensive AI product portfolio.
Click the link below to watch the full video.